All right, now that we've introduced revenue and expense accounts, how do we record them or how do we record transactions that affect those accounts into T accounts? Now we're going to find out that revenue or a net income will increase owner's equity. So if you make money, okay, the value of the company is going to go up. So if you generate net income, owner's equity is going to be affected. It's going to increase. If you generate a net loss, the value of the company is going to go down. Okay, so revenue or net income increases owner's equity, expenses or net loss decrease owner's equity. Now we're going to find that a net income or a net loss will see the effect on a balance sheet. We won't see the effect on the T accounts. Now, when we want to increase a revenue account, we are going to credit. And when we want to decrease a revenue account, we're going to debit. So the rules are here. Now, we're going to have a separate T account for every revenue account that the company has. Okay? And just like that, we're going to have a separate expense account for every expense account that the company uses. So you'll have a separate advertising expense account. You'll have a separate salaries account. You'll have a separate equipment repairs account. Now, to increase an expense, we are going to debit, and to decrease an expense, we credit. Now, if you remember the basic rule, revenue follows the same rules as owner's equity, and expenses are opposite of owner's equity. Okay? Now, the double entry accounting principle still holds true even though we introduce revenue and expense accounts. So for every debit, there has to be an equal credit, right? So if you debit something, you have to credit something as well. Now, I've provided you with some examples of transactions. So, what accounts are affected if the following transaction occur? Okay, now we're going to assume we're doing the accounting for a gym, and we're going to use the account membership fees to record money earned from selling memberships. So let's suppose that we sold a membership on account. So what accounts are affected and how? So one is accounts receivable, right? Because people now owe me $350. So accounts receivable is going to be debited, and the credit is going to be membership fees because I have now earned some money, right? So our revenue is going to go up. How about if we bought some supplies and sent a check? So remember, a check is cash. So our cash is going to be credit, correct? Because we no longer have the money. And supplies is going to be debited. Next one. We received a bill for advertising. Okay? Now, have we paid that bill? No. So we just received it. So that means I now owe it. So what's going to be credited? Accounts payable, because now my accounts payable goes up. I now owe $600 more. Now, what's debited? Advertising expense is going to be debited, okay, because I received the bill. I have now incurred the cost. Next one. A debtor paid the $200 she owed. So cash is going to be debited because I'm receiving the money, and accounts receivable is going to go down because she no longer owes me that money. All right, next one. Now, no revenue is recorded here because I didn't sell a membership that day. All right? She's just paying what she owes. All right, next one. We paid the rent bill received yesterday. Okay? So is rent expense affected? The answer is no, because we didn't get the rent bill today, we got it yesterday. So when we got it yesterday, we recorded the fact that we owed it. So we recorded the expense yesterday and the fact that we owed it. So today, all I'm doing is paying off what I owe. So cash is going to be credited, okay, because I paid it. And accounts payable is going to go down, or is going to be debited. All right, so you can see that we're starting to add on to what we've already learned in some cases. Okay, just like the next one. You have to understand how to record assets, liabilities, and owner's equity. Or you can't forget because we're going to continue to have transactions that affect those accounts. So the owner invested $700 in the business. So cash is going to be debited and our capital account is going to be credited. Okay, so the memberships for $1,050 cash. So cash is going to be debited, and since I sold them today, okay, our membership fees or our revenue account is going to be credited. And the next one, received a check for $50 from Jay Smith for an amount he owed. So cash is going to be debited and accounts receivable is going to be credited.